Okay, so we had already session one, and I did send out a link to the video in session one. Quickly, I'll just say what we did in session one. If you want to see that video and you haven't seen it, it's we did what's new in EdgeRater Pro 24, list of features, and then in the demo, we went and discovered more information about where data is stored on the computer, where you can go to find out more about templates, how you can run a template, how you can view reports and charts, and how you can configure charts and indicators. We looked at scans, so using the entries and exits tab, and we used the cross above upper Bollinger Band as a scan as an example. And then we ran a trade simulation using the cross above the upper Bollinger Band and using a time-based exit, setting it only to 1 day, I believe. And then we looked at the result of the simulation, and we looked at charts by going through the trade list and seeing the annotated charts. And then at the end, we had a Q&A. If you haven't seen the recording, you should have gotten a link to it, but somebody did email me earlier saying they couldn't find it. So what I'll do is, well, I'll just send this out again in the next email. So part two, agenda today. We're going to have a look a bit more on entry events and time-based exits. So we already looked at the time-based exit for the cross above upper Bollinger Band using 1 day. And there's a template that is going to be very handy for doing this kind of investigation without having to go through the whole trade simulation, manual trade simulation step we did last time. So we'll take a quick look at that. Fits in quite nicely with what we did. And then we'll look at batch testing a moving average entry and exit. So a couple of things to do. I think that's going to take the whole time. So we'll see how we go. There'll be time for questions at the end as well. And I'll also look out for any questions in the chat as we go. I'm not sure that I'm actually looking at the question panel. So if you've got a question, please type it in the chat instead. So hopefully everyone can see EdgeRater now on the screen. Right, so what I'm going to do quickly as just a quick reminder of how easy it is to run a trade simulation for cross above upper Bollinger Bands, I'm just going to actually just repeat what we did. It doesn't hurt to see that a second time. So what we do first of all is we find the scan, and I already know that it's called AUBB, so it's easy for me to do a control find, control F, and then double click it, pop it over here. I've always been using so far the list of liquid options. So that's a list of stocks that have liquid options associated with them. And then I'm using the entire amount of data. And I don't think I mentioned this last time, but every symbol list has its own backing data. And you can define how much data you want to associate, you want to bring in, pull in to each symbol list. And you do that through this edit symbol list button here. So if you hit that, you'll find a dialog pops up, and in there, you'll have options for how much data you want this list to include when you do an update. And it's by default set for 10 years. That seems to be a good average, to have. Sometimes you will want to have more data. Sometimes you'll want to have a specific date range, depending on what you're actually testing. And also, there's this tab here, which is very important. If you ever are curious about what symbols have what data, you can look at the data snapshot tab, and that will tell you, is the symbol in the data snapshot and is it in the symbol list? Because you can actually end up in a situation sometimes where you've got a data snapshot, and the snapshot is really the thing that contains the actual open, high, low, close volume prices. And then you've got the symbol list, which is really just a text file with the symbols in. And you can end up in situations where you have missing symbols in one or the other. So for instance, if I now sort by form and 2, I can see in this list, Silvergate capital SI It is in my symbol list as SI, but it is no longer in the snapshot. So when I created this symbol list by looking at stocks that had liquid options, SI was part of that. And I haven't updated this list in a few weeks. And so now when we're bringing in the data, we do an update for this list. It can't find that data. And the reason is that Silvergate is no longer part of the NYSE. It's OTC stock. And the data source that this list is assigned to is the EdgeRater Premium data source, which we can see right here. And that only has data for the major markets, NYSE, Amex, and NASDAQ, not the OTC. The reason that it's a good idea to have symbol lists which have their own backing data is that you can be sure when you're doing back testing you have completely isolated the data that you're interested in testing, and you can set it to a specific range of dates or a specific number of years, and you can also choose the data source that data comes from. For instance, if that data wasn't available within the EdgeRater Premium data, maybe it's in Yahoo. So you have an option for data provider for Yahoo, or there's a couple of others in there too. Metastock data format, which is a very common format for data, and a lot of programs that allow you to download your own data will put it into Metastock format, so you can always read it into EdgeRater. Okay, so I didn't mention that before, and I just wanted to make sure we know about that. And what I'll do is we'll just hit run when you've got the scan in there. Remember this from last time. And then I'll go to trade simulation. I won't make any changes to the settings, and I'll just hit run again. And this should show almost exactly the same results as last time. I'll say almost because a few days have passed since then, and because my list is only looking at 10 years worth of data, and exactly 10 years, every time I do that update, you're going to get a few days drop off the very beginning of that set of data and a few days added on to the very end of that data. And so you won't have quite the same number of trades that you may have had before. Okay, so that's just a quick reminder of how to do that. And then obviously you can see this information here. We talked about that last time. You can see the equity chart. We talked about that last time, and the summary. So we've seen all that before. One thing I didn't say before is that when this runs, it actually does generate an Excel file. And you can always see the Excel file by using this pop-out button, and that will pop it out into a spreadsheet viewer. And these files, trade simulations, are not saved into the reports directory automatically like templates. Whenever you run a template, it generates a report, and that report is automatically saved into the reports folder on your hard drive. When you do a manual trade simulation, it's not automatically saved, but you can save it by popping it out and then clicking Save As. And once you've done that, it automatically opens up in the reports directory, and you can say, this was my trade simulation, trade sim, and then you can say whatever you will remind you of what the simulation was for. It was cross above upper Bollinger Band for well, actually this was a 10-day hold, so I didn't change it to 2. This was a 10-day hold. Okay, 10 days. So you can say something like that and save it, and then it's on your hard drive until you erase it. Okay, so even though it's quite straightforward and very quick to do that, it's it does take some pressing of keys. One thing you can also say here, by the way, this is an interesting thing, is Bollinger Bands have 2 standard deviations is the way that they're commonly drawn. That's their default settings: 20-period look back and 2 standard deviations. If you set that to 3 standard deviations, you should get way fewer stocks. Okay, so now you can see the list of stocks is really reduced. And in order for a stock to meet the criteria of crossing above the 3 standard deviation Bollinger Band, it's a much higher bar to meet, and so there are way fewer stops there. And so it's very simple to make these changes in these parameters here, run the entry scan again, and then just go back to trade simulation and run the trade simulation again. And you should get fewer trades. You've got 1,100 instead of 8,100. And obviously you're going to get a different looking equity chart on there too. The trade list, obviously that's only going to contain 1,100 trades. Okay, and the trade summary is the important one to see. How many of those were winners and how many were losers? Previously on the two standard deviations, we had almost 50-50, and here it's slightly in favor of the winning side, but then I have actually changed it to 10 period fixed hold period, not 2, as we did last time. But don't worry about that for now. You can go and do that investigation yourself. It's quite straightforward. But I just wanted to show that way of manually changing the parameters for a scan. Right, now, because this is looking at only a fixed hold period, it's often tempting to run multiples of these. So you might say, well, I'm going to look at the 2-day hold period. I'm going to run that. Okay, I've got my results now for 2 days. Now I'm going to try a 3-day hold period, 2, 3. I'll run that. Okay, and now I've got my results. I'll copy them somewhere. And now I'm going to run for 4 days. And okay, I've got my results. I'll copy them somewhere. So it's a little bit of a process, and you have to, save the files. That's another manual process. So if you're looking at just fixed hold periods off of a entry event, a signal of your choosing, then there is a way of doing that with there's a template called the probability of touch template. If you look in Pro Tools and you go down to choose the one called POT/PO, that's probability of touch, probability of expiry, that can be run on multiple symbols. There's another one called the probability of touch based on technicals. That was the initial template for this idea, and then a few months later we produced this one here. So this is really the one to run for this type of thing. Now in here it does default to the scan we were looking at already, which is above upper Bollinger Bands, and you can choose a period for running this. So we had 10 years of data. So what we can do is, if I just set this to be the expiry to be 12/31, say 2023, we won't actually get the whole date range here because we only have 10 years of data in this list. But it's fine to say start before then. We'll just get 10 years of data, and then you just press run. So this is a nice template that gives you a good visual of that. So you have to let it do its magic. You can see at the bottom left, it's doing some calculations here, some processing. Behind the scenes, it's actually doing trade simulations, but it comes up with an interesting way of looking at this data, which you'll see in a second. Here we are. So I'm going to close the chart down now because we're not really interested in the chart. Okay, close that down. Thank you. All right, so what is this showing? At the moment, you can't really see. What I'll have to do is just scroll down, because as we scroll down this list, we start to see the interesting information. And now I'll actually, for the moment, I'll leave it zoomed in so that you can see the numbers. And I'll explain what you're seeing here. So each column represents a hold period. So the first column is the 2-day hold period, 3 days for this column, 4 days, etc., all the way through to 21, because that's what we specified when we ran the template here, report through 21 days. So you can change that. Anything in orange on a template is a parameter that you can change before you run the template. You go back to the report. And the number of occurrences is how many signals it's analyzed for that column, essentially. And so then you look down a column, and on the very left-hand side, this is the percent change after that many days. So, for instance, column C is the 2-day column. So all the numbers in column C are the percent change after, well, okay. The column on the left, column A, is the percent change, and then the percent number that's in column C is the percentage of stocks that actually hit that level of percentage gain or loss during the trade. So that's the probability of touch. So it's not where it ends after 2 days, it's where it hits. So it's talking about the maximum favorable excursion and the maximum adverse excursion of those trades. And so if you go out further, so say 10 days, then we're talking, now we're talking about over the 10-day period in this column here, column K, over the 10-day period, these are the percentages of times out of this number of occurrences, 11,136, the percentage of times that this level of percentage gain or loss was hit. So, and these are color coded so that you always you can see where the common breaks are. For instance, let's take a look at a real number here. So rather than talking general things. So we're looking at the 10-day column, and we'll look at the last green value, which is 54.97. And if you go over to the left, you'll see that that is a 3% number. So what that means is that 54.97, let's call it 55% of the stocks that had the cross above the upper Bollinger Band hit 3% within 10 days. They didn't close necessarily at 3%, but they hit 3% within that 10-day period. And then on the negative side, you can say there were 52.28% of those stocks hit negative 3%. So it's a fairly even split. You can see, this, if you're thinking that this is a signal that tends to lead to higher gains, like stocks that are bullish, you would expect to see more green area essentially above the 0% rows and less green area down here. So you'd hope that you have more positive numbers than negative numbers. Okay. Once you've looked at this template and you've seen the numbers, it really is better to zoom out and not look at the numbers, because you get an overall picture of the performance over that time. Okay, with the demarcations, so when it goes from, say, orange to red, that's a mark of 10%. So 10% of the stocks hits, for instance, let's look at the 21-day hold period. 10%, this level here where it goes from orange to red, that's the change from less than 10% to more than 10% of stocks that hit this level, 22.5, 22%. Okay, so it's a very quick way of just analyzing an idea. If you have a trading signal you think is a great signal that always leads to bullish or bearish moves, or not always, but for the majority of time, you can quickly run that idea on this using this template. And what you can do then is go back over here, and then we can say, what about the 3 standard deviations? That's a higher target for it to hit. Does that tend to lead to better results? So what we can do is we could either just type a 3 into this where it says 20,2, I could say 20,3, or the other way is to click on the chooser, which brings up the script chooser and output chooser, and I can search for the AUBB in here, AUBB, which is under System Scans, AUBB, and I'll set the parameter to 3 here, choose the event output, click OK, and that pops the string in there. So it's exactly the same as me typing it in. It's a visual way of choosing the script you want to run. Anyway, now I can just run this. All other settings are the same. So it's going to go through and bucketize everything from 1 to 21 days. You see it's a lot quicker than doing a manual process. And now I'm going to scroll all the way down here and I'll zoom out. Okay, this is essentially the 3 standard deviations cross above the 3 standard deviation Bollinger Band. All right, so just so we're clear, it's when stocks cross above their 3 standard deviation Bollinger Band. These are the percentage moves that it made in that symbol list over that 10-year period. So it's the number of stocks that moved. When you're looking at the high number here, we can see that 10% of the stocks after 21 days made 32% gain, and on the negative side, 10% of those stocks made a negative 23% gain. How is that compared to the 2 standard deviation? Well, here you had a 22% gain for 10% stocks and a 18% loss for 10% of those stocks. So you can immediately see, if I go here and make them the same zoom level, you have to make them the same zoom level to compare the two. But when they're the same zoom level, you can see that a 3 standard deviation move leads to more, across above the upper Bollinger Band, leads to more volatility, quite significantly. Yeah, so instead of 22% moves for 10% of those stocks after 21 days, you've got 32%, an extra 10%. So it's significant and interesting. Now this sometimes it's hard to explain this template, and I just wonder if that makes sense. So is everyone understanding that? Are there any questions on that? Okay, so everyone understands that, yes? Everyone will understand that after a review of the video and a play around with the software. Yes, yes. It just takes a little bit of looking at to understand what it's showing you. But it is very powerful information that's based on real historical data that you can use. Okay, what I tend to do, because looking at the actual numbers here, it's there's just a lot of numbers, and looking at the colors and the demarcations of the color lines is a much better, easier way to look at it. What I tend to do is take a screen grab of these two, or the ones you're trying to compare, and put them side by side. And so I have actually done that. I'll show you the result of that. 1 second. So if I do this, hopefully you can see. Yeah, there are those 2 results. Okay, the 2 standard deviation is on the left, and the 3 standard deviation test is on the right. And the upper blue line, that's your 10% of stocks got to 22% on 2 standard deviations. But 22% on the 3 standard deviations, well, 10% of them got to 22% after only 11 days instead of 21 days. So that, the volatility there is, you can see the volatility. You've got bigger moves on the upside and bigger moves also on the downside. So a 3 standard deviation move in a stock, we can say in general, looking at that list of stocks over 10 years, if you see a 3 standard deviation move, so a stock crossing above the upper Bollinger Band, a 3 standard deviation Bollinger Band, you can expect more volatile times. So exercise for the viewer. So this is something, if you want to, before the next webinar on Saturday, try and run this template, but this time compare the BLDB. So this is the cross below the lower Bollinger Band, and run that for 2 standard deviations and 3 standard deviations. And when you run that, you might be surprised at the types of charts you get. Because what would you think in general if the difference between when a stock crosses above its upper Bollinger Band compared to when it crosses below its lower Bollinger Band, is it gonna lead to more volatility on a cross below the lower Bollinger Band, or less volatility? So that is an exercise to try, and I will talk about the results in the next session. So I think hopefully you understood what that was showing. And let me see here. Yeah, so if I do this, okay, I have a poll now, and so bearing that in mind, everything I just said, see if you can answer this question. 2 questions. So the first question is, would you expect the cross below the lower Bollinger Band to lead to more or less volatility than the cross above the upper Bollinger Band? What do you think? And it doesn't matter. It's just a what's your idea? The whole point really of running it in the software is that you'll actually, you actually get to find out. It doesn't matter if you're right or wrong when you're thinking about it, really. I'm pretty sure 50% will be right and 50% will be wrong. Okay. So that's good. And then question 2, try and answer question 2. How likely are you to test this for yourself before the next webinar? Okay. All right, end poll. And we can share the results here. And you can see that most people thought that there'll be more volatility when there's a cross below the lower Bollinger Band. And that is a fair assumption. It's fair. I'm not saying it's right, but it's a fair assumption. But when you try it, do try the 3 standard deviation move too, because that is the surprising result. Okay. And let's go back to sharing my screen. Screen. There we go. All right, so that covers the first part that I wanted to talk about. Simple way of doing testing on single events. You can obviously, the events that I chose there, the event that I chose are just part of the scans that are already in EdgeRater. So I'm looking at system scans, and there are quite a few scans in here, but it's easy enough to write your own scan, and we'll be getting into writing scans later in this series. So not today. We're just going to look at things that are already built into the system today. And you can play around with these and do some testing on these. But of course, you can write your own too. So the next thing that we are going to look at, as I said, was batch testing. Okay, so batch testing and moving average entry and exit. So the first thing was we looked at today was we added entries, we did the trade simulation. It was a very manual process, and once you start to play around with parameters, it gets a little bit messy when you do it manually, because you've got to keep track of all of the results. So there is a way of doing this, running these things in a batch. So the important thing here to understand when we look at the batch configuration is the right hand panel here. So all of these are settings that you can use for a simulation. In addition to, obviously, when you're doing a simulation, you'll also have these settings, okay, which is your entry, and there's also exits and parameters. And there's also a time setting as well. So you can have a date filter. The way to set a date filter, I think there was a question in there about date filter, is to basically choose the from and the to date, and then click on this use button, make sure it's pressed in, and then it will use that, it will use those dates. I wouldn't recommend on the price, there's a price filter and a volume filter, and I wouldn't recommend using any of these, definitely not the price filter, because of this whole business of back adjusting for splits and dividends. That was a question that came up from last time, is does EdgeRater premium data adjust for splits and dividends? Yes, absolutely it does. It 100% needs to do that in order to allow backtests to give you correct results. But the problem with the price filter is if you say you're trying to test stocks that are only $10 or above, for instance, as an example, you don't actually know that the stock was $10 5 years ago because it's already been back adjusted. If it ever had a split or a dividend in that period, the price of the 5 year ago bar would have been adjusted to account for it. So that when you look at it on a chart, you don't see these big jumps for for splits and for smaller jumps for dividends, obviously, unless there are special dividends. But yes, you probably, and I'm thinking about it now, probably should not have included a price filter in this as an option here. And volume filter is a similar thing in that volume is not exactly correct either, because when you do a split, you're actually doubling the volume. So that's not exactly accurate either. So I wouldn't use those, but you can use date filters for sure. Anyway, that was all an aside, because what I wanted to do was say these are the configurations. When you set up a trade simulation, there are a number of things you need. Okay, an entry selector, an exit selector. You need to run it over a certain date, and you need to choose a whole bunch of settings for your simulation, like all of these things in here. Okay, so there is a configuration file that you can create. If you look on your file system in the location we talked about last week, so that's under Documents, EdgeRater. I don't think that's showing me the whole thing, but we got that. Yeah, Documents, EdgeRater, Configuration this time, Trade Simulations, and System. Generally, anything in a folder called System are files delivered by EdgeRater, and that you shouldn't personally change them because they'll be overwritten. But in here you'll find this one underscore, read how to use trade simulations, and that's a very important one to have a look at. It's been updated for 2024 because there are new settings in here now. Okay, and the settings that are new are the simulation dates and the scripted entries and exits. But let me just explain. Each row in this file is a separate simulation run. And so all of these columns that you see in here represent one of the fields that you would normally manually enter in on the right-hand side of your trade simulation panel. So for instance, the field portfolio rules max open positions, you could set a value, you could set that to a certain number. In the configuration file, if you scroll all the way over to portfolio rules section, here it is. There will be use max open positions, a setting here, and then the max open positions. Okay, so one row represents one simulation run. Okay, So the way that you can start with your own simulation file is to copy this, or just do a file save as, and save it into, I would not save it in the system folder, I'd save it in the trade simulations folder, and I'd call it whatever is makes sense for the batch you're running. But this one is going to be a moving average test, sim moving average across. Okay, I'll save that. Now, of course, it's just saved these these dummy things in here, so that's not sensible. I just wanted to save it, and then we can go in and we can actually change these rows to put in the simulations that we want. And so the example that I wanted to run is a test of, we can test with some parameters on moving averages. So we're going to leave off simulation dates. We're going to run over the whole amount of, well, we're going to let the template choose the dates. We're not going to choose them for each individual run. We're not going to use this scripted entry and exit thing. That is new, and that's something else that we will talk about. But we're going to have to put in a trade entry script and a trade exit script. So what are the values, what strings should go in there? Strings, what I mean by string is what text should we put in there for a script? The way to find out is to go to your script designer, script. You can go to the script designer, you can look at chart scripts, and we already know that under system scans we have a moving average cross scan. It's called MAU for moving average cross up. So I'll look for MAU. Okay, it's a moving average cross up. And if I click on that and edit it, I get a little warning that it's a system script and I shouldn't be messing with it, but I just wanted to show you what it is. So MAU is basically the code for that, basically is an event which is a cross with the moving average of close, fast period, crossing over the slow period, moving average of close. Okay, so the actual name that you should put into your script is the name under reference name, this thing here, reference name. And it's called, in this case, scan.mau. The reason is it's in the system scans file, and you can have many different files, these XML files which contain scripts, and each can have names. The names may collide, between one file and another. And so the system, EdgeRater, needs to know which one of those files to pull that script from when it's doing the testing. And so there is this prefix. And the prefix actually is this, the first node in the tree, scan. So I'm not going to save this, but if I was to change this to anything else, scan FDF, then when I come down to my script, it's going to say the reference name is now this thing here. But I'm not going to do that. I'm just going to close this down without saving. That's fine. And when you're creating your own scripts, they normally appear in myscripts.xml, and they have this my node. And so all your scans, indicators, and scripts will be prefixed with my dot in here. Okay, so it's quite important to know. All right, so trade entry is going to be it's going to be scan dot MAU, moving average cross up, and then you've got the two periods. I'm going to choose, let's see, 20 and 50 is a good example, and basically it's going to go long on the close of the bar when that happens. The exit script, I'm going to choose a scan.mad, so moving average cross down. I'll also choose 20 and 50 for fun. And I'll make sure use fixed hold period is false because we're not using a fixed hold period. We're going to use this, the output from this script. And that essentially is all you need to do to set up a one simulation. But of course, now we've got that simulation, we should create more rows and change the parameters. The tag is important because you need to put something in there, some text, so that it identifies the run. Essentially, I need to when I look at the results of this, it's going to be among a list of 10 or 15, 20, whatever other results, and so I need to identify which one, which result I'm looking at. And so because this is I had the parameters set here to 20 and 50, what I'll do in the tag is I'll put, I could just put 2050. That's a good tag for it. And so the result will have 2050 as the tag. Okay, so now I'll just copy that down. In Excel, a nice way to copy it down is to select the row there, copy it down to the next row, and then go and make changes for this next row. So this time I might choose to use 50 and 100. 50, 100 is going to be my tag, and everything else is the same except for the parameters for scan MAU. This time I'll use 50 and 100. And scan, and across the exit, I'm going to use also 50, 100. Now, I'm not saying this is a great system. I'm not making a great system here. All I'm doing is showing how you can use the batch processing. When you run this, you'll see what I'm talking about. 50 or 100. Okay. All right. So yeah, so what we have now is basically just two scripts. They're saved in an Excel file on the file system, and it's basically two configurations for simulations to run. And obviously, you can create any number of rows in here you want. One thing that I like to do, if I'm doing multiple rows, I'll show you this, but I won't go into how exactly, we won't go into actually creating this, but let me show you a quick way, or a good way of creating multiple rows. I might do something like this. Yeah, this is a script from my other computer, but basically I'll call out the actual parameter values in the first set of columns here. I'll just insert 4 new columns, call out the parameter values, and then the tags will be auto generated from that. So the formula for the tags up here, if you know anything about Excel formulas, you can understand that. You can find out on the internet, obviously, how Excel formulas work. But so if I was to change one of these parameters, fast MA, say to 15, this tag changed, right? 1520, and also the scan changed 1520, because that is also looking at these cell values in order to generate the script there. So that's a really great way if you have multiple sets of parameters you want to test. Just call out the parameter values in separate columns, copy them down, and it's very easy then to change them and play around with your settings. And they're the only things you have to change then. Everything else will auto update. Hope that makes sense. Okay, so we've got just these two in here, and I've saved. We can go to that file we just created, mod average cross, and we can say when we run this, we want the output to go to a folder which we will name. We'll call it. So I like to call anything whenever I do a simulation run, I like the output to go to a folder that starts with the name sim, just so that I know what it represents, and I'll call that sim mod average batch. Okay, and here's where you can override the dates. So here I'm going to say yes, I'm going to override from 1/1/21 to 12/31/21. So this is 1 year only. I'm going to run this simulation for 1 year. You can choose, obviously, you can do anything you like in here. So you can choose your own dates, etc. But this is just my setting. I'm going to run this. It's fairly quick. It's run 2 simulations now. You can see the tags, 2050, 5100. You can see the count of trades for each of those runs. The 5100, there are fewer trades because they're slower moving averages, so it's going to take longer for them to change across to occur. So there are fewer trades. It has a higher average because there are more bars in this trade in these trades as well, because it takes time essentially for that exit to be fired. So a 61 bar average trade versus a 40 bar average trade, a 1.62% average gain versus a 0.21% average gain. So this is, when you run it, you will see this summary report shown. It does give you general information about what you ran here. So what the input configuration file was, where the output folder is, what the override dates were. But the important thing to know is that behind the scenes, it did go and generate proper trade simulation files for you. And in order to see the trade list, you can actually just select one of these. You can put your highlight any one of the rows. So I'll highlight I'll highlight the, yeah, this one, 1.6, the 5100 row, and click on Open Linked Document. And now these are all the trades that occurred in that simulation. I'll zoom in a little bit. And now I'll bring the chart back because the chart will actually be handy. They are 5100 already, so that's good. And 5100. So I did this earlier. I set this chart up with 5100 on, so it didn't just automatically magically appear there. So I've already got moving averages on here. Let me change them so we've got the 50. They are 5100 already, so that's good. And 5100. So I did this earlier. I set this chart up with 5100 on. So it didn't just automatically magically appear there. You do have to put those indicators on the chart yourself. And so well, first of all, we'll just verify that it's giving the right signal. So this is the 50, the red, the green is the 100, simple moving average. After the cross, you have an entry. And it will not exit until that crosses back the other way. So here. Boom. Yeah, so it's quite delayed. You can see it's quite delayed because the stock moved already from this bar here with this big long tail. It already moved a fair distance before the 50 and 100 crossed. So if you had a sooner entry, a way of doing that could be better. But these are things you can try. Yeah, and that's the exit. Now it's always interesting to sort by P&L, so you can find the biggest gainer here, 186%, for instance, in AMC, and you can see the way the indicators lined up there, and you can just scroll down quickly through this list and see those. So that's good. I always like to see the trades that did not work, and you can see here we have quite a few. Yeah, as I said, this is not a great. This is not a suggestion for a trading system. I'm showing you the way to test parameters on setups. Okay, so yeah, there's a lot of losing trades in here. But yeah, but this was automatically generated, and that configuration file is always now on your system, so you can come back in the future and run this and run that on any other symbol list or other date ranges and things like that. Okay. So what about the other? Yeah, so this also has the trade summary. So you should find that the average profit and loss percent, 1.62%, that is the same, should be the same number that appeared here, 1.62%. The template actually went into this report and pulled that number out and put it into the summary here. Okay, so the count should be the same, 164. That will match up with number of trades. The average number of bars in a trade should match up, 61. Yeah, so 61, and so on. Yeah, so you have a nice way of setting up a batch run configuration for any kind of trading trading entry and exit signals that you want. So I've shown quite a couple of different ways of running a trade simulation. So remember, on Saturday, we went through and we did the manual process, entries and exits, trade simulation tab, click on run, look at the report. Today, what we did is we went and, first of all, we looked at the probability of touch template, where you can put any signal you want that's already in the system, or you can write your own, and see the efficacy of that signal, whether it tends to lead to higher or lower prices, or more volatility or less volatility. And then how to do batch testing if you have parameters, multiple parameters that you want to test. Obviously, the danger of testing with multiple parameters over your entire set of data is you will end up curve fitting. And a good example of that is I had just tested using the year 2021. Okay, we haven't curve fitted because we didn't do really enough parameters to curve fit it, but we could have found by running against that data set the absolute perfect number of moving average periods crossover if we were trading a system like that. But that's just on that data. If you go forward a year, so 21, as you may remember, was a pretty good year for the market anyway. So let's look at 22, which we know was a pretty bad year for the market. And let me run that. Okay, and so yeah, this is really, really important to know. Look, you've got in 2022, the same moving average crossovers have negative averages. Okay, and to remind you, SPY, I'll put up a chart of SPY. We'll look at 2021 for SPY. It comes starts here, 21, and ends over here. 21, nice year for SPY, and then 22 was pretty bad, pretty rough trading in this and the whole of 2022, I think. So yeah, so something like that. You've always got to be cognizant of the time period you're running it against and things like that. Anyway, I think we have we've covered quite a lot. Hopefully that was interesting. And we next time we're either going to get into writing your own templates. This all depends on whether I can get Dr. Ken Long to do a presentation, which could be a recording that he'll send me, or it could be a live thing. We're not sure yet, and when that's going to be. So that just depends. If I can actually get for him to do that for Saturday, then Saturday's presentation will be about templates and about obviously he'll do a section on Dr. Ken Long's templates, and then I'll probably do a section on how to write your own templates. That would fit quite nicely, and then there'll be one more session after that where we will get into multi-factor trade analysis, which is a very very interesting way of looking at what other factors might be affecting your trading system. And I hope to also get into a little bit about writing your own scripts. Obviously, we're not going to have a lot of time to do that, but we can actually do follow on after that as well. Okay, I'll take any questions now. And yeah, so let's just go back through the questions. So Pete may have left already. Okay, so it's an interesting question. Oh, we have Lynn's question. Actually, that was the very first question. Can you show the correct way to use the date filter? Yeah, but there were two. So there were two things. If you're doing the batch run template, Lynn, if you're running a batch, let me bring up the. Here we are. If you're running a batch template, then you can set your simulation start and end dates, essentially per row, if you like, per simulation. or you can leave that off and then leave that set off as false, and then go into here and go to override dates, yes, and choose a date for the simulation. But if you're doing a manual simulation, when you run your entries, just make sure that you have a date filter set in here. So say I wanted to run this entry and exit. Right now it's run for the entire symbol list of the entire data snapshot, which is 10 years from 2014 all the way through to 2023. Okay, but if I want to just filter that to, let's say, 2021, I can say 1/1/21 to 12/31/21, and then just say use. Basically, the use thing just allows you to turn that on or off, whether you want to use that filter. So I'll just say use it. And then I'll hit run here. And now I should only ever see dates in here for from 21 to the end of 21. And when I run the trade simulation, it's only going to use those signals in the entries tab. So it will only use those. It will only use 2021 essentially. So that's how you use dates. Mauricio, there is, so right now I'm not sure how you heard about the webinar, but if you came through the website, then you will have seen that we have just released EdgeRater PRO 24, and so yeah, if you go to EdgeRater, so we just released EdgeRater PRO 24. And if you click on this pricing down here, you'll see that there is a super special price for as an introductory offer, which will end soon. And anyway, this gives for the lifetime, for a pro lifetime version of the software, this gives a really great deal. Okay, so that is the offer there. Mauricio, thank you for that question. And let's have a look. Yeah, so I think that was. Oh, and then there's the question: can we filter this to bull markets? Okay, so you can filter to bull markets by just changing the dates. That's one thing you can do. That's not very satisfactory because you have to kind of manually run separate scans. You could do something like if you do know the dates of the bull markets, because you're going to have bull markets in different stocks at different times. You know, maybe there's a gold bull market, or maybe there's an oil bull market, or you know, the S&P 500 bull market. Anyway, you can put your own. You can just create multiple rows in here, and instead of changing the entry and the exit script, you just change your simulation start and end date for those bull market periods. That's the way you would run against different market periods. It's like filtering, market filtering, filtering based on market, where the market is. Yeah, what phase the market's in. You can do that. The other thing you can do, we'll get into with multi-factor analysis, is you can just run a simulation over the entire period, but then you go and you tag each trade with a tag, essentially, which will say whether it's, you can have those tags say bullish or bearish, and then it will give you results using that tagged information. So we'll get into that. Okay, I think we're done. If there are any other questions, I appreciate everybody showing up on a Wednesday, probably morning for most people. It is evening for me because I'm in the UK. But I appreciate everybody showing up, and hopefully you don't have such a hard day ahead of you. And yeah, thanks for coming, and we'll see you next time. The recording will be around tomorrow, and I will send a link to that. And don't forget, Saturday's webinar. You do not need to sign up. You already registered for the whole series, so that's all done. So appreciate it. Thank you. Yep. Thank you, Gary. Thanks, Jim. Thanks, Ron. Okay, awesome. Good to see you all. See you next time. Bye for now.